Hello and welcome to the Money to the Masses live event on ethical and sustainable investing. Can it improve your world and your wealth? So I've got two fantastic guests that we've handpicked for you today, and they will introduce themselves shortly. But just to explain, on this event, what we will do, we will cover everything to do with ethical investing. It's going to last 1 hour. We've got lots to pack in. So we're going to cover everything from what is ethical investing, investment performance, how does it stack up against non-ethical investing or non-climate investing, what is climate investing, how much does it cost, how do you get started, despite the amount of money that you may have, it's accessible to everybody. How this will work, just to give you a quick bit of admin, is that you are able to ask questions on the platform that you're using, whether it's Facebook or YouTube. If you want to ask a question, then please do so. Just enter the question in the box. I will see it. Don't worry about that. And then we'll ask it of our panelists as we go along. We won't necessarily do a Q&A at the end. We'll keep the conversation flowing, and then we can ask your questions as we go along. And to add to that, anybody who does ask a question will be in the hat for a Money to the Masses mug, the mugs everybody wants, and of course a copy of Alice's book, which I won't steal her thunder by telling you what the title of it. So let me introduce my first guest. Alice, if you could introduce yourself first of all and tell everybody who you are and what you actually do.
Yes, hello. I'm Alice Ross. I'm the Deputy News Editor at the Financial Times, and I've just written a book called Investing to Save the Planet that came out last week and is, oh yes, you've got a copy there. I should have been doing that myself. And is, really aimed at anyone that wants to invest with climate change in mind. It covers a whole range of topics, some of which I'm sure we'll discuss here, but from divesting to engaging with companies and to some of the really great opportunities there are out there in terms of solutions to address climate change, which is actually quite exciting.
And to my other guest, Moira, if you could just introduce yourself to the world.
Thank you, certainly. So I'm Moira O'Neill. I'm Head of Personal Finance at Interactive Investor. So Interactive Investor is what you call a DIY investment platform. We allow people to trade shares, funds, ISAs, hold ISAs and SIPs, self-invested personal pensions too. And we supply a whole range of useful content and insights and research to help you make the right decisions about your investments. And I head up the content side of the business. We also have an ethical investments rated list, which we put together just over a year ago. And we've been very keen on educating our customers and the readers who come to our platform about that subject area. And it's something that we really want to increase the transparency and the education around.
Brilliant. So before I give the first question, I want to also point out, if you're lucky, you could see Alice's cat make an appearance. It's already made one appearance before we started. I'm hoping, fingers crossed, it's going to come back.
I'm sort of trying to hide him, but he's.
Don't hide him. Let him come on the camera. Right. Moira, can I start with you? I mean, broad question. I mean, what is ethical investing? What do we mean by that?
Goodness, I can remember writing about this when I started out as a cub reporter about more than 20 years ago. And back then we talked about ethical investing being something that was extremely niche, that was something that you would invest in funds that avoided the bad stuff. So things like tobacco or sort of weapons and that kind of companies that were involved in those areas. And over the years, I've just seen it evolve. And I think now we've reached a point where ethical investing is much, much more mainstream, and there's lots of different approaches to it. And I think it's really entered the public's consciousness that you can sort of invest and grow your money, but align it to your own personal principles at the same time to make sure that your money is doing the good that you want to see it doing in the world.
I suppose that's the point, isn't it? That we've got in the world, consumers will be making choices about their lifestyle that can reflect their ethics about maybe it's climate change or about how people are treated in employment or whatever it is. But now you can now do that with your money, whether it's banking or investing. And one of the things I want to pick up with Alice is climate investing. So this is quite an interesting branch of ethical investing, isn't it? And it's something that your book is focused a lot on that and the other areas that Moira mentions, but that was off the back of an article you wrote a couple of years ago, wasn't it?
Yeah, exactly. So, I mean, the whole book actually grew out of this article that I wrote last summer, so 2019. And I'd been just personally feeling quite stressed about climate change. This was before we had a global pandemic to stress about. So putting it in that context, but stress levels were probably quite low. It was horribly stressful at the time. And I think the Amazon was on fire and there were all sorts of reports coming out about how dangerous climate change was. And then, as it happened, the editor of the FT Money section, Claire Barrett, asked if I could write an article for the weekend paper. And she said, you can really do whatever you think is interesting right now. And I said, well, can I maybe write about solutions to climate change investing, which is this new area that I was just learning about then? Because I found that really quite a positive thing to learn about, that it wasn't all doom and gloom. There are these companies out there, really trying to sometimes invent cool things that are going to help to combat climate change. And it sort of gave me hope. And in the book, while I talk a lot about climate change investing, I'm not really talking about the scary facts and figures around climate change, because I kind of assume that people know all that already. And that's why they want to now look at their investments and invest with climate change in mind.
Okay, so, one of the things, just to clear up before we then delve a little bit deeper, is this whole idea of, so we have ethical investing, people will hear things like ESG investing, socially responsible investing. Alice, could you just quickly clear up some of those acronyms? Because you do it very well at the start of your book, because it's something that's evolved over time, hasn't it? It's something that we've had for a while, and then we've got through to this sort of ESG phenomena.
Yeah, Moira will know this as well, but Moira, when you said that when you started out 20 years ago, it was seen as such a subset, such a sort of a niche thing and almost a bit of a weird sort of do-gooder thing to invest ethically. And that's been my experience as well. But back then it was called different things. So it might have been called ethical investing, or then it was called socially responsible investing, or SRI. And now the term that you tend to see associated with ethical investing is ESG, which stands for environment, social, governance. And so, but what can be confusing about that to investors that want to invest with climate change or the environment specifically in mind is that any company can be in an ESG fund, or it can be called ESG friendly if it just ticks the S or the G side of ESG. So it could be a company that has really great governance and it's doing everything right in terms of how it manages itself, or it could be a company that's treating its workers really well, but it could be a company that has nothing to do with the environment. So I think that confuses a lot of people early on, because they think ESG is sort of associated with environmental investing. And while environmental investing is a part of ESG, it's not all of ESG. So that's the first thing that people probably need to sort of get clear when they're thinking about doing this.
But to many people, some of those things may be more important than others. So, really ethical investing is a personal thing, and some people may care passionately about climate change or the environmental side of things, and others may be more worried about societal impact or how companies are run in a good way, in a regulated way, and how business is done. So I think there are lots of different approaches to this, and although climate change has reared its head because of things like Greta Thunberg and David Attenborough documentaries, etc., really coming in, seeping into our public consciousness. We're watching Netflix, etc. You see there are other issues that other people might care about too, and I think really you have to think quite carefully about what matters to you before you plunge into this whole area.
Okay, because one of the things that'd be interesting, Moira, on that is that obviously as Interactive Investor, they're the second biggest platform, aren't they, in the UK? So you've got a lot of assets, there's a lot of customers on there. How is the whole ethical investing, how's that shaped over time? Are Are you seeing more and more customers doing it? Is it becoming increasingly popular? Is there like momentum behind this movement towards ethical investing?
It's quite recent, the momentum. So we looked across our customer base over the past 5 years, and the proportion in ethical funds has gone from under 1% up to 5% invested. So, I mean, that's quite significant in 5 years. And it's not just, the young and woke investors who are doing this. It's actually the baby boomers who are just as interested, who are just as invested in this area. And I think, it's a mistake to think that it's just the young and sort of idealistic who are interested in this area. It's a really across the board. We did a wider survey as well. We did our Great British Retirement Survey this year, which is 12,000 adults. It goes wider than our customer database. So we have about 350,000 customers, but this went to 12,000 across the country. They weren't necessarily interactive investor customers. And we actually found that across the board, the level of investment in ethical investing was about the same throughout the year groups. But it's actually the younger section there who are more interested in doing more. So we have a bit of a mixed message there, that the people who are actually doing it, it's quite consistent across the age groups, but you do see a lot of younger investors having this real interest in doing more of it.
I mean, that's interesting to hear, because if the people have been watching the news the other day, there was a particular car company that made a bit of a jibe at their own customers as baby boomers, making out that they probably about time they buy cleaner cars. And it just shows you that this is across the board, that people are interested in this this movement. One of the things that I just want to touch before we move on to sort of the performance and stuff like that is, obviously there are different ways you can ethically invest, particularly for like climate investing. And I know, Alice, you mentioned in your book divestment, which is if you could explain what that is, because I found this quite interesting. This was like the early movement, wasn't it? But it really in ethical investing, where you just sort of don't try and ignore certain assets.
Exactly, yeah. So as Moira was saying at the start, ethical investing started off by being something that you didn't do or something that you avoided doing. So you would come to it from a position of like, well, I don't want to invest in tobacco or arms manufacturers, and so you just didn't want to have any of those companies in your portfolio. And now in the sort of more climate change focused times, that's extended to oil and gas stocks. So you have this huge trend in the last few years where you have pension funds, you have universities, you even have whole countries divesting their investments out of oil and gas stocks and coal companies as well. Usually coal has come first in that, because the coal companies are more polluting and more obviously a dying sort of industry. So it's been more of a trend to sell out coal companies first. But now you're seeing divestment out of oil and gas stocks as well. I mean, the really interesting thing about that is that I think when people want to invest with the environment in mind, it's the first thing that they think that they want to do is sell out of oil and gas companies. And that's completely understandable. They think, well, these guys are huge polluters, so I don't want anything to do with them. But it's not quite that clear cut. I mean, partly for investment returns in your portfolio, but mostly because a lot of the oil and gas companies are involved in this energy transition, where we're transitioning from the old polluting oil and gas into renewable energy. And, there is an argument to be made that it might make more sense to try and support them on that journey, whether as an engaged shareholder, because if you care about these things and you sell your shares to an investor that doesn't care about them, isn't that better to sort of stay and try and change from within? And I'm not taking a view on, one way is right and one way is wrong. As Moira said, it's a very personal preference when you're doing any kind of ethical investing. You do need to think about what you want to do and why.
So obviously that starting point you mentioned there, Alice, about what's important to you and why. So there's a very personal element to investing ethically. And of course, you can choose to invest via things like shares. You could buy the individual company stocks, and obviously you have to do your research around those sort of the criteria. But obviously most people who'll be watching this invest via funds, which will be funds that are ESG funds. And funnily enough, we've got quite a few questions already coming in, which I'm going to touch upon you. So please keep sending in those questions. Can I come back to them? One of the things I just want to quickly ask Moira about is, if you're going to pick an ethical fund, so an ESG fund, whichever you're going to pick, does it mean that gives up performance? Because people will naturally think that you narrow down the spectrum of companies that you can invest in potential, that fund manager who runs that in an ethical way, that fund. Does that therefore impact your returns?
Well, the answer is really there's a growing body of evidence that suggests that it doesn't impact your returns. In fact, it might help them. So companies with good environmental, social and governance practices should be expected to outperform their less ethical counterpoints, especially as interest in sustainability in the environment grows. There's a study earlier this year by Money Facts, an independent study, and that found that ethical funds that UK investors can access have actually proved particularly resilient during the coronavirus pandemic. So that's the recent performance of the funds has been pretty good compared to the non-ethical propositions. But we found this, there's a very, very impressive piece of evidence, which is a study of studies. It's an academic study, and it was done by the University of Hamburg in 2015, so 5 years ago, but still pretty relevant. And it looked at 2,000 studies since 1970 into the impact of returns of investing along these ESG lines. And it found that in 62% of the studies, the use of ESG criteria had a positive impact on the performance of the fund and the investment. So I think it's quite a powerful study of studies to show that there is an academic body of evidence out there that shows this stuff can work and can deliver good results for investors.
To add to that, funnily enough, because people who follow the way I invest money live on Money to the Masses know it's one style is momentum investing, and actually because of what you've suggested, the pandemic, they'll probably find themselves potentially to actually be in some ethical funds because of their performance has been so good in recent times, which kind of backs that up. But going back to one of your points on ESG funds, how do their credentials stack up? Gareth has asked a question here. How do they stack up? Stephen's asked earlier, is there like a rating or scorecard we can use in some way when it comes to investing in any of these funds? I mean, Alice, do you have a view on that?
Well, I mean, one of the issues with the industry at the moment when it comes to ethical investing and climate change investing is that it's sort of, I think of it as an industry that's very much at the start of its journey. We're sort of in the foothills of the whole ESG, even though it has been popular for a few years. It's still, as Moira was saying, it's only gone from 1% to 5% of users on the website that she's in charge of, investing in these funds, which is actually still quite small. So there is a lot of, I wouldn't go as far as to say it's the Wild West in terms of ESG credentials, but a lot of the industry hasn't agreed exactly how to define ESG. So this can be an issue, which is why sort of at the moment it does help to understand yourself the way that the terms are being used differently by different fund managers in different funds. But I mean, Moira, you're very well placed to answer this, because I know that you guys have rated some of the funds and you've made some recommendations about which ones you think are good.
Yeah, well, Alice, I mean, when we tried to look into this area and thought we need to really try and educate people on this, we thought the first step is to find the funds, and there are 5,000 odd funds out there that investors could use, and I'm including open-ended funds and investment trusts and the passive investments called ETFs in that too. But so we looked at what was actually on our platform, because we have most things available, and we found about 150 options. So that's our long list of what's available. So that just shows that the market's pretty immature. And they're not that easy to identify. We had to do a lot of work to identify them, and that's because there's no fund sector that's ESG or climate change where you can compare like with like, and they don't even have consistent naming conventions either. So it is pretty difficult to find them, and that's why we feel what we've done has been a really valuable thing for investors to actually list 150 options that are available, and then we've narrowed that down to what we think are the best in class investments within that group as well.
Do you think there's an element of greenwashing going on in some of this though? Because I know as this trend starts to mature, they're going to fund houses are wonderful marketeers, and we've all been around them and talked to some of the managers and all sorts, but they are very good at sort of capturing the trend that people are interested in. And is a danger that there is some of that out there where people are saying that they're focusing on the E or the S or the G rather than actually being truly ethical? It's the same fund, but they just said we're a bit more ethical.
Yeah, well, we polled 21 asset managers this summer in the ethical investing space, and that most of them said that they think that ESG considerations are going to in time be integrated into all investment decisions, which means all funds out there will have some element of ESG in them, and that's where it's going to become really difficult for investors. And in fact, the financial regulator, has expressed some concern about this, which we call this greenwashing phenomenon, and we need to protect consumers from being misled about the suitability of investment. So just because it's got a name that has green or sustainable in it doesn't necessarily mean that the underlying investment is. The Investment Association's done a bit of work to try and sort of create a common language across investment funds, but I still think there's a bit of a alphabetic soup of investment jargon out there that doesn't really help the consumer identify what is genuinely ethical or ESG.
And I think fund managers are aware that this is quite trendy right now, and so you do see some of them trying to launch funds or sometimes rename existing funds to say that they're sustainable. There was actually an investigation by Morningstar, which is a ratings provider, and lists funds and categorizes them last year, and it found that more than 250 funds last year had repurposed themselves from traditional to sustainable. But when it investigated, it found that in some cases the fund managers had changed the fund purely for marketing purposes without changing the structure of the fund or the investment philosophy of it. They just made a few tweaks, like removing some of the really dodgy companies, but would you really call that an ethical fund? But the problem is that when fund managers do that, it's not obviously breaking any rules right now. So I think that's quite a good insight into some of the sort of grey areas that we're dealing with here.
There's a Matthew Hargreaves actually asked a question, an interesting surname given that we're talking platforms, but he mentions the fact that why don't we just have investments and then the rest of them are unethical investments? Maybe one day we'll head down that road where people will be choosing things much more based on ethics. Two questions actually related to the sort of the structure of funds, because obviously most of the ethical funds that are out there tend to be active. So people who don't know what that means, there's normally a fund manager who is picking the individual companies for whatever reasons to make sure that they meet a particular remit that they've got or a mandate. And therefore, the belief obviously is that that's more expensive way of doing it. There's extra charges. But what about investing passively in an ethical way? I mean, are there options out there to do it? I mean, Alice, you talk about this in your book in particular, so it'd be interesting, and some of the drawbacks actually, because you mentioned about these sort of indices these track.
Yeah, so basically you can totally have a passive ESG fund. It will be, at the moment, what you have is the index providers that are creating the normal indices like S&P 500 or FTSE 100 index that a passive fund will track. They will modify that a little bit, so they'll call it, actually, Moira, I'm not sure is there a FTSE 100 ESG or FTSE all companies ESG, but you'll know the more specific. But anyway, some of the mainstream indices, they'll adapt them and have the same name with ESG added in.
There's a FTSE for good, Alice.
FTSE for good, of course.
Yeah. I was about to say the FTSE for good's out there.
Yeah. And then MSCI has various ESG indices based on all of its indices around the world. But they'll just tweak it a little bit, and they'll sometimes remove the offending companies or the really obviously offending companies, and then they'll maybe change the weightings and overweight it a little bit towards some of the, in their eyes, more sustainable companies. But I think what's important to understand is that this is, again, only the opinion of the index provider, and you can have quite different opinions on whether a company is considered sustainable or not. So you have like some slightly controversial companies like Tesla. Some indices will include that in their ESG ratings as an ESG friendly company, and others because of the environmental side, and others really don't because it has questions over its governance. And so it is all a matter of opinion at this point. So you run that risk when you're buying a passive ESG, but equally I think you also run that risk when you're buying an active fund, because that's depending on the fund manager's opinion. But in both cases, you can sort of do a little digging yourself and try and work out what the philosophy of the fund is, why they've made the decisions that they've made, and then ask yourself, well, am I comfortable with that? Does this align with what I think? And you can probably find something that aligns with whatever it is you think, whatever your position is. There'll probably be something out there that is right for you, whether that's active or passive. But if you want to invest passively, you certainly can in ESG.
Moira, on your obviously Interactive Investor have been, I think personally, a bit of a front runner in terms of trying to provide a list of funds that have been researched to be ethical. I mean, if you're listening to this, you don't have to use Interactive Investor. They have this list. You can use that as your starting point, as a criteria to then go and buy those funds with any other platform that you wish. It just gives you a very good starting point for some research. But quick question. Are there investment trusts in that list? Because we've had a question already about, can you do it via investment trusts? Because obviously investment trusts and ETFs have a lot of attractions for investors these days.
Yes, there are. There aren't as many as we have in our mainstream non-ethical list, but there are one called Impacts Environmental Markets Investment Trust, which kind of invests in what it says in the it's all to do with the environment. And we've also got Pacific Assets Investment Trust in there too,
okay.
which has a sort of sustainable element embedded into the philosophy of the fund manager.
And that's interesting, Moira, because it doesn't have an ESG or ethical or environmental name.
No, it doesn't.
It's a good example of how it's not easy to tell, isn't it?
Yeah, I mean, if you're going to go for look for names, I mean, there are things that come up like responsible, socially responsible, SRI, ESG. Ethical is still there on a lot of fun names. Positive change, that's a new one, isn't it? So there's still a lot of different naming conventions that mean slightly different things, and you have to really go and look at what the fund manager's philosophy is. And if it's not clear on the website, I would question it. You have to be you can see some very clear outline of what the underlying philosophy is to make sure you're avoiding the greenwashing.
And of course, when we mention funds in this by name, this goes without saying, the usual caveat, this is not advice, this is all just information. But interestingly, that Moira mentioned one there, Positive Change, and it goes back to Baillie Gifford had one, the Positive Change fund.
That's the Positive Change.
But just so people going back full circle to what Alice said, go and look at those funds, because the amount of Tesla those funds will have, people won't realise necessarily they'll buy funds that may be ethical. You can end up overexposing yourself to one particular company and not realise it because they're having certain criteria, and they have quite high weightings for some of these. But it depends on the individual fund, but always look beneath the bonnet. One for you, Alice, actually here is that, well, for both of you really, that the first question we got right at the start of the event, Paul asked, and it was that given that the UK and soon to be the new US government are looking towards cleaner energy and legislation, I mean, which areas and sectors do you think will grow ethically over the next 3 to 5 years that may not have been thought of? I'll broaden that question really to cover the. Do you think there is this wave now for cleaner energy, more ethical funds that's being driven by governments who are trying to rebuild economies in a greener way? Are we actually at the start of a trend, do you believe? Because you touch upon again that in your book, Alice. I mean, particularly in the US.
Yeah, definitely. I mean, it's basically all sort of happening at once at the moment. You know, governments are introducing much stricter targets for climate emissions, whether that's, you know, introducing zero emissions targets for 2050, as we've introduced in the UK as a country, or whether it's introducing specific targets in specific sectors like electric cars. You know, we now have this target to, you know, mostly be driving electric cars from 2030, which is quite a massive development, and that's going to lead to all sorts of knock-off or roll-off sort of situations with electric cars, and not just battery technology, but also infrastructure and charging points and all that. You know, and there are companies springing up to try and meet all this demand and do all of this, and you know, it's possible to invest in these kind of companies, which is really fascinating. Not always through listed funds, because some of them are startups, which can be a bit more risky. But yeah, and then at the same time, you have regulators, you know, looking at introducing regulation to punish companies more for having too many emissions, and and then you have investors as well demanding more from the companies they invest in. You know, they're getting worried about climate change anyway, and they're putting pressure on companies to do more to disclose their emissions, and also to disclose their climate risk, to have a plan to cut their emissions. So the companies are facing pressure from the investors, and everything is sort of moving in this similar direction. Interestingly, I saw, well, one of the commenters was saying, you know, shouldn't all investment be sustainable? And there is this movement, as Moira was saying as well, to make all investment carry an ESG factor to it, because that does seem to be the way that things are going. And it isn't just a sort of a thing that you tick a box or you consider ESG, or you could sort of not consider it. I think it's becoming something so much more central that you have to consider across all types of investment.
Yeah, I would add, we talked about clean energy there. Now that there are products that invest in themes like that, and for example, there's an ETF that invests in global clean energy, and it's done absolutely amazingly well. And as a result, we were holding it in our ethical growth portfolio. We've actually dropped it, because the key with all of this is to make sure that you have a balanced portfolio that has exposure to lots of different types of investments and doesn't just concentrate on one particular theme. And, you know, if something does particularly well, then you've got to think about readjusting your portfolio and sort of almost selling your winners and buying some other things that haven't done quite as well. I think investors, you know, if you're very passionate about this area, you might think there's this great thematic investment out there that I really like the sound of, but please don't pile everything into one theme. Spread your money around. I think that's probably a better, less risky strategy.
Yeah. I mean, one thing to add to that, I suppose, to give an illustration of risk, because there are risks in different types of investment. And one of the things that, when I did some research before looking at the ethical funds that had done quite well, and one of the two trends really that came to the fore, there was a definite bias towards smaller companies, and there was a definite bias towards technology in there as well. So two trends that have done really well compared to their sort of counterparts in the sort of recent history. So does that, is there an element where if you invest ethically, you need to look under the bonnet for these things? Because you could actually be taking a style bias that is potentially boosting your returns, but actually therefore skewing your portfolio in a certain way. You need to counter that.
Yeah, I mean, we look at we decided to try and get our own criteria for ethical investing. We came up with 3 different styles, which we think most funds would broadly fit into. So one is what we've already talked about already, which is screening out the bad stuff. So we call that avoids. And then there's the style where it's mainly active fund managers are going in and looking at under the bonnet of the companies that they're investing in and seeing what their ESG practices are and taking that very seriously. So we call that considers. And then there's a different style where it's thematic, and the whole ethos of the fund is to look at a particular theme or sector and fully embrace what's going on. So we call that embraces. And I think you've got to be think about the balance within the portfolio and what you're putting in there, and whether you've got exposure to different regions of the world and different industries, because I think that's still very important when we're investing our nest eggs for our retirement. It's true, Damien, if you did go into clean tech or clean water or clean energy, you're very potentially in an area which could do fantastically well, or it could do badly, and you might have a limited exposure to a particular sector or even region of the world.
I would add that that's totally true, but also happily, there are areas of environmental investing that do involve less risk. So, I think often when people think about climate change solutions, they're thinking about, clean tech, alternative meat, these sort of new startup companies doing these really interesting, crazy things, but that might be more high risk. So you do have the potential for higher returns, but you're taking more risk. But actually a lot of what is needed in terms of environmental investing is energy efficiency, and things looking at the circular economy, recycling and waste management, and quite boring stuff, like not the kind of stuff that's going to make you feel really excited, like that someone's inventing something new, but really important for all companies in any sector to cut their emissions. So you do also have investors or funds that are targeting companies that are setting, any company, be it Microsoft or something, that are setting good targets on reducing emissions. And a lot of those companies do tend to be large and listed, and so not the kind of companies where you're going to make crazy returns, but that's great, because that's what a lot of investors want, is something a lot safer. So I think good thing about it is, depending on your risk profile and how much risk you want to take, you can probably find companies and funds that will suit you depending on what you want to do. You're totally right that you need to check that you're balanced out in terms of all the sectors and types of companies that you've got in your portfolio.
So what we're going to do now, we're going to pivot onto the how now. So we're going to start pinning down. Everyone's got excited about ethical investing. They're sitting there thinking, do you know what? I didn't realize we could do this. We're going to start now. How do they go about doing it? So, I mean, obviously the first one would be, look, if you're not confident with investing, and this is a general piece of advice, is go and speak to a financial advisor who can specialize in it, but go armed with that information that you want to, what matters to you, that kind of stuff. But obviously, assuming that people are willing to run their own money and they want to look at these investments, I mean, what sort of advice would you give or tips, rather than the word advice, tips that you would give to be able to start from day one? So we're not allowed to say pick what aligns with you, because we're going to assume that they're going to do that. I'm thinking more of the sort of practicalities. How do you pick an ethical fund? So Moira, if you want to kick off, how would you go about picking an ethical fund for a portfolio that you had?
So, I mean, I would start by looking at the UN Sustainable Investment Goals, because they are a good source of things that you might care about, and look at and first try and work out what's most important to you. And then you can come to Interactive Investor and view our content for free. You don't have to be a customer, so you can see what we've put on our long list, you can see what we've put on our short list, and you can also see what we've put in our ethical portfolio, which will give you lots of ideas. But there are other sources out there too. One is called Fund Eco Market, which is a really great website that sort of focuses in on the core issues and the different approach of fund managers, and it goes into it in a lot of detail, and you can really sort of drill down and find funds on there. Morningstar has a criteria that can help you sift through funds. It has a sustainable fund type, and it also publishes carbon scores for funds as well. So there are some good tools out there to help you narrow down your selections. But I think you have to think about whether you just want to screen out the bad stuff, or whether you're so passionate about this you want to choose a fund that's going to change the world. And I think those are the key things to get straight in your head before you start sifting through them.
I mean, that's great, because that gives people a starting point, because a lot of the stuff I find people struggle with getting their sort of the first rung on the ladder to be able to do some research. Once they can see maybe perhaps how you've done it, then maybe they on Interactive Investor, then you could perhaps then they could take that further and start to analyze it and do it themselves. I mean, Alice, you make some interesting points in your book, actually, because although I said earlier that some of the investments are therefore can be higher risk, you actually draw some quite good comparisons in terms of you're a lower risk investor or a high risk investor if you want to go for, say, investing in clean energy, and you break it down by chapter. But I mean, could you give some examples of the type of the sort of category of fund? Because I mean, one of them I know you talk about obviously clean energy funds, but if you're a lower risk investor, you might want to take a bit of risk off the table.
Yeah. So actually, Moira mentioned Morningstar, and they actually came out with a fantastically helpful sort of guide to climate change funds earlier this year, which will be online. And they don't actually have a climate change fund category as such, but they do divide. They looked at all of the funds across their universe and they divide them into 6 different types of climate change funds. So you have stuff like climate solutions, and you have clean tech, clean energy, but then you also have low carbon funds, or you have ex fossil fuel funds. And those last 2 categories are going to be where you find your sort of more larger liquid, mainstream companies. And so those kind of funds are probably going to suit you if you want to take less risk. But the other thing to have in mind is that some of the funds are aimed at, as you can probably tell from the name, ex-fossil fuel or low carbon. Some of them are aimed at investors that are more interested in divestment, in this sort of idea of not being invested in oil and gas stocks. Although interestingly, even there, some of the ex-fossil fuel funds do have companies in them that are still invested in fossil fuels. It really can be quite confusing, but that could be because some of those companies are still transitioning their energy away. Like, for example, this Danish company Ørsted is the largest offshore wind energy company in the world now, but its portfolio still has a really sizable chunk, around a third, coming from oil and gas. So, it's kind of you can't really invest perfectly at the moment, I would say. It's a question of where you want to see the gray areas. But I mean, and then to your point about the different risk levels, I mean, I think that the first thing you should do is find a financial advisor and work out what risk you're comfortable with. That's the first thing you need to do, regardless of whether you're investing ethically or whether you're not. I think so many people that don't know too much about investing will sort of want to invest in what their friend has invested in or something like that. And I sort of try to explain that in the book, that friends that will know that I know a bit about finance will ask me what kind of mortgage should they get, or what should they do with their ISA, and they just want me to tell them. They don't really want. They're like, just tell me a fund, and I'm like, I can't do that because I don't know why you're investing and what your risk level is and how much money you have, and you need to discuss all of this with a financial advisor. I mean, I would say in this specific case as well, when we're talking about ethical investment or climate change investment, I think there are loads of great financial advisors out there, but some of them are, I think, from my experience, if you agree more, it can be a little bit old school about ethical investment still, and they will probably tell you that it will harm your performance, even though, as we've discussed, there's actually not really any evidence for that. So I would definitely look for an advisor that says that they either specialize in ESG or are very comfortable with it, because they'll be able to advise you better on the options that there are.
I'm going to go one step further than Alice. I can. I'm going to not be diplomatic. You'll probably find hardly any financial advisors who can do it. Not many very good at picking investment funds, to be quite frank. So, I mean, there was some good not to do things that you mentioned in there, obviously, that you've got to treat ethical investing like you would do if you're investing for any other reason. So you've got to have that whole goal aspect of what you're trying to invest in, the diversification element, because what people will notice is there's been a definite skew towards companies, equities and stocks. And of course, ethical investing goes beyond just one asset class. And I mean, I'll ask Alice before coming on to Moira for some examples. In your book, you mentioned something that was actually, I hadn't really thought through myself, to be quite frank, about green bonds and about the power of bonds versus equity. So just to, obviously, generally people know that just to give them a backdrop, that bonds are effectively loans to companies. So they tend to form the sort of lower risk element of your portfolio. They don't always move, diversify equities. People say they move in opposite directions. It's not always quite true, but they add diversification benefits. So, I mean, can you explain just very briefly the benefits of being an ethical investor in bonds? It doesn't sound very sexy and exciting buying in bonds rather than equities, but they do have quite a strong impact, don't they, on companies and their behavior?
Yeah. It's interesting. I think often when we think of ethical investing, we think of equities, and that's the main thing we think about. But there's a growing sort of school of thought that says that if you're selling or buying shares, you're sort of just, passing bits of paper from one investor to another. And where you can really have an influence is through being a bond investor, because those are, a company specifically needs your money as an investor for usually a specific project. So any company can issue a green bond if it's for a project that is sort of labeled as green. So you could give a company money for this specific green project to help it to do that. So you sort of have a better idea of where your money is going. And so that's good. And then bond investors that I've spoken to have also said that it can be quite handy around the negotiating table if a company is looking to refinance a bond, or it wants, more money from you, the bond investor. These are professional investors, obviously, with a lot of money. That if you can push them then at that point you can say, I'm only going to refinance you if you look a bit more at your climate change targets or something. So there's more of a conversation going on more often, which again is good from the influence point of view. One thing about green bonds that you do have to bear in mind, we were talking about, Moira was talking about making sure that you're not overly concentrated in certain areas with shares. Well, green bonds, while they are rising in popularity, they are skewed to certain sectors. So they're most commonly issued by utility companies, banks, and European companies at the moment. So you should be aware that if you're buying, say, a green bond fund, that you might have more of a skew to those areas. So you should just be aware of that.
And then Moira, coming back to the research that you've done at Interactive Investor and screening out some of those alternative asset classes. I mean, there aren't many options, are there, in that space? I mean, there's one or two that have performed quite well, which we've talked about before, which it'd be good if you could mention them. But there are some options, albeit limited.
Yeah, for bond investors, we do have quite a few bond funds on our rated list, our ethical list, and so let me just count out 1, 2, 3. There's 6. So and they go.
That only just beats the word few by.
That's in our best of class list. We put 6 bond funds in there, and they range. There is a green bond ETF there too. Yeah. There are sustainable ones which have sustainable in their name. One which has ethical in its name, and one which has social in its name. So there's lots of different approaches you can take to bond investing, and I think they are great diversifiers for your portfolio, because they will perform slightly differently to the equity, the shares side of your portfolio. But we didn't find, for example, an ethical commercial property fund, which we would have on our mainstream list. We didn't find an ethical gold fund or something like so some of the major asset classes we didn't find options for in the ethical sphere. Also, we didn't find a lot of income funds in the ethical area, and I know a lot of people want income funds because they're investing for retirement, etc., and the sector is not so mature. There aren't really that many sort of bog standard income funds out there.
Is that because there's not enough oil companies that aren't polluting the world that can produce a decent dividend, so they don't have as wide a choice? But
it could possibly be an element of that. But yeah.
But it just shows you, though, that there is a real choice. There is choice out there, and I want people to take away from this part of the show is that you do have options. There are ETFs, there are tools out there that you both mentioned that you can use. I want to throw, somebody's asked about are there ESG portfolios? Now, the robo-advice propositions out there, so people like Nutmeg, Wealthsimple, they all now provide portfolios that are ESG portfolios. So it'd be unusual if they don't. So do go and have a look at them and look at how they perform. It's quite interesting, actually, because when I looked at one of their portfolios before, their ESG portfolios have absolutely smashed their normal portfolios out of the water in terms of performance in the last sort of 18 months. So it just goes to show that it doesn't necessarily mean you have to hamper your returns. One thing I want to move on, now people have an idea of how they might do it with new money. Existing money that they have, Alice, you mentioned in the book one of the things about pensions, because obviously that's where a lot of people's invested wealth probably is in the mainstream, in their company pensions or their private pensions, and they actually have quite a bit of power whereby they could choose to invest that ethically, can't they?
Yeah, I think, you know, for a lot of people, I mean, a lot of people may not have any money to invest aside from their pension. A lot of people, their pension will be something that they have through their company. They'll have signed up to their company's workplace pension plan. And, you know, these days for most of us, that's going to be a pension plan where you get to choose possibly out of a small range of funds. There should be an ESG option, an ethical fund option within those funds, but it's probably not going to be the default fund. So the default fund is the fund that you get put into by the company if you don't make a selection. And apparently 90% of people, over 90% of people that are put into the default fund never change out the default fund, even though you can. So that's one thing that you can do immediately. Is your company pension fund like a bog standard fund? Is it the default fund? Or could you switch it to a more ethical option? But you may find that you don't like the other options on offer, in which case you can talk to your company about it. And if enough of the employees at the company tell the company, well, we want you to, you know, give us some better options, give us some better ethical options, then the company, you know, will hopefully take that into account, because there are a lot of other pension providers that the company could go to. So, you know, hopefully we can sort of see this pressure from the ground up when it comes to company pensions as well. And happily, on the other side of things, the actual pension providers themselves are also looking much more closely at this and you know, looking at actually making the default fund an ESG fund, and that's something that we're probably going to see more of in the years to come.
I mean, one thing I want to add to that, on Alice's point, everybody, if you want to do ethical investing and you want to have choice, you have to be a pain. And there is an element where I think if everybody watched this show, decided, look, I'm going to go and look at what my pension fund is in. If you can't find a statement, go and ask HR to go and give you one, because they're basically going to have to do it, or find out who the company your pension's with, and then find out from that company where your pension's invested. Like Alice said, it could be in a default fund, but it is interesting. There'll be companies that won't have chosen the pension scheme that they've got, that their employees have, based on any real ethical criteria, despite them having some sort of ethical criteria for their company and the way the company's run. So it actually could be an open door that you could be pushing on if you say, well, why is our company pension, not invested in line with the company's ethos? Because a lot of these pensions would have been set up years ago by very well-paid financial advisors, and therefore they not necessarily be changing things. Go and talk to people is the point, because you can make choices and you could start to invest ethically. The other thing I would like to add is, Moira, something that came to light recently when I was talking to somebody is that you could do research, for example, on an ethical fund, and your platform doesn't have it. Your platform of choice doesn't have it. So if you've got a SIP, for example, but that doesn't have to be the end of it. You don't have to just give up and then say, well, I'm going to have to move my whole pension somewhere else. You can contact the platform, can't you?
Absolutely, you can contact them and say and ask them to add it. And yeah, I think it's a perfectly legitimate thing to ask. I mean, we add funds all the time to our platform when new ones are launched, or something that we spot that or a customer comes in and wants it, and we're always trying to expand the choice on our platform. So I think it's, yeah, have that conversation. The other thing to add is that, you know, about your pension, if you're looking at your workplace pension or your old pensions, because lots of us accumulate old style pensions over our working lifetime and we forget about them, we just leave them, and it's worth digging back and thinking and looking at old workplace pensions, and are they performing well? Do they have the options that you wanted? If they don't, you have the option to transfer your old pensions into a self-invested personal pension, where you could get all the new options. Now, I'm going to say there are caveats around this. You need to read the small print of your workplace pension. You need to check you're not giving up any valuable benefits before you do the transfer. But we're finding a lot of people do want to have better control of their investments, and you can do that in a self-invested personal pension where you have those 5,000 investment choices to get to.
But it's interesting you say that, because again, the consolidation of pensions, and we're talking about ethical investing. There's a quite well-known one of the not robo-advice firms, but that actually have just launched a fossil-free fund that they're trying to get the level of investment from their customers up to about 100 million. So those sorts of things are quite interesting, that we're moving into that realm of they're realising that customers want this kind of stuff to be able to invest ethically. I mean, Alice, one of the last things I want to pull up on is, we've talked about funds, we've talked about your pension. There will be people who have direct investments, like they might hold shares. And somebody's asked the question actually about how can they vote at AGMs? How does that work? Is there any way they can influence the companies? And this was quite enlightening in a section of your book. Could you just fill us in on the rules and actually the power that people do have surrounding this?
Yeah, no, I saw that that question as well, which was, I was hoping you'd get to that. But yeah, so I actually interviewed someone for the book who has become a bit of a veteran of going to these AGMs. You know, if you have just a few shares in a company, you can go to the annual general meeting and you can ask a question. And so she had these sort of tips for getting her question answered, where she would like wear a bright top and make friends with the people with the microphones beforehand so that they would sort of notice her and she could ask her question. And she would, you know, she would really prepare what she had to say and, you know, make really good points. You know, she said at one point she was at one of the Shell AGMs and people cheered her when she was saying, you know, we really need to think about climate change and, you know, dividends might be important, but the future of the planet is more important. I mean, she was a very inspiring person. You know, you don't have to go personally to the AGMs. Another thing you can do is get involved with these shareholder action groups. So there's one called Share Action, for example, and what they will do is they'll pool a lot of small shareholders, so just, you know, retail investors, and, you know, push for a company to do something like disclosing its climate risk or something, or, you know, setting climate change targets. And so this is something we're seeing a lot more of. It's, again, something that's really just starting to happen. And so far, the resolutions don't always, or often don't get majority support when they're actually put to the board, but they're failing by smaller and smaller margins. And I think the tide is definitely moving that way, because you're also seeing, what you'll see with some of these smaller shareholder resolutions is that often some of the larger institutional shareholders who are ethically minded themselves will come in on it. So they'll sign up as well and they'll be like, yes, this is a good point. And, you know, sometimes that's all coming from this grassroots group of individual shareholders, and the larger guys are getting involved as well. So yeah, you can definitely affect change if you're staying as a small shareholder in some of these companies, which is, you know, arguably another reason to maybe consider not divesting as well. But it's entirely personal preference, of course.
And one other thing that I just wanted to touch upon is, again, leading on from what you described, was the kind of inspiring message as well that came through on what you'd written, was that you can actually do that to fund managers too. You can sort of start to put pressure. You can write to anybody. Nobody can stop you writing to them to demand the fact that, well, what's happening with that fund that your pension might be invested in? If you haven't got much choice, start to demand that they change the way they do things or like justify things. And so if more and more people do it, this is where you get the power. And it's just like any other part of consumers' lifestyle, that they have an ability to be able to reflect the sort of basically cause change around the world in a positive way through ethical funds. That is it, actually. I mean, I know we could keep going. We have more questions. One of the things somebody did mention on there is a way of getting a rating for ethical advisors. So that's going to be an idea I might pass on to some of the companies that actually do rate advisors and say, here's an ethical one. So it's great to see some ideas coming in there. So thank you so much for joining us on the panel today. You've both been brilliant. Could you just finish off by telling people where they can find out more about, in your case, Moira, the sort of ethical investing side of things with Interactive Investor, and of course, Alice, your book, when's it out, for example? So Alice, if you fire away to start with.
Well, so it was out last week. was it last week now? It was out on the 19th of November, losing track of time and lockdown. Yeah, whenever the 19th of November was, that's when it was out, 11 days ago. And yeah, you can buy it. I mean, the bookshops will be open from Wednesday, which is quite exciting. So you can go into a bookshop and buy it then, or you can order it online in all the usual places. It's on Amazon. It's on.
Will you be going into the bookshop and taking a photo of it? That's what I would do.
It was a bit sad when the book come out during lockdown when all the bookshops were shut. I hadn't really expected that when I started writing it. But yeah, no, I should do that on Wednesday.
So we're going to look out on your social media feeds to see the picture of the book in Waterstones. That'd be brilliant. And Moira, for you, where should people go to find out more?
Thank you very much. So it's the website is ii.co.uk. And if you do /ethical-investing, you'll get to our resource, which has our long list, our short list, our portfolio, and lots of information about the sort of the academic evidence for ethical investing, and lots of explainers. So hopefully that will help you in your journey.
And also for me, just keep an eye on our socials, because we will put this whole episode out, and some of the things that we talked about in here, that we will link to them so people can find the resources that we all mentioned at various different stages throughout the show. So that is it. Thank you ever so much for joining us, and until our next live event.